Welcome to Impact. Headlines. US posts strong growth in Q4 2023. China industrial profits down. Oil prices at a 2-month high. The US economy grew faster than initially thought in the fourth quarter, rising 3.3% from a year earlier, with overall growth for 2023 recorded at 2.5% on a year-on-year basis as consumers and businesses continued to spend. Christopher Waller, Fed governor, said that if economic activity that seemed to have moderated in the fourth quarter of 2023 does not play out, then rate cuts could be delayed. Impact on Sri Lanka. The United States is Sri Lanka's largest export market. From January to November, exports to the United States fell to a $2.5 billion, down 18% from a year earlier. China's industrial profits were down 2.3% in 2023 on a year-on-year basis due to weak demand at home and abroad, adding pressure on economic growth amid a worsening property sector crisis. According to Ni Wen at Huanbao Trust in Shanghai, last year's profits decline was chiefly due to sharply lower factory gate prices driven by overcapacity in some industries. According to the IMF, China is expected to grow 4.6% in 2024, a decline from 5.2% in 2023. Impact on Sri Lanka. A weak Chinese economy offers decreased investment opportunities in the form of FDI to Sri Lanka. China is important for Sri Lankan exports and tourism, contributing positively for overall economic growth. In 2023, close to 70,000 Chinese travellers visited Sri Lanka, although still lower than the 250,000 prior to the COVID pandemic. Oil prices rose to a 2-month high to $83.55 a barrel from positive US economic growth and signs of a Chinese stimulus boosting demand expectations. According to Tim Evans, independent oil market analyst, positive US economic growth, cooling inflation and drop in crude oil stocks have all combined to wedge prices higher. Further, Red Sea tensions and potential rate cuts by the US also supported the recent price increases. Impact on Sri Lanka. Sri Lanka's high dependency on oil imports means changing prices significantly affect its balance of payments. While the country's foreign exchange reserves have improved in recent months, they remain dangerously low at just around 3 months of imports.